Hello, Maverick traders. This is Rob Reinhold, and holy cow, what a day. What an absolute crazy day. And it actually was the biggest up day since 2020. So we have these days throughout the years. Most of the days throughout the years are up a little bit, down a little bit. And every so often we get these days that are just insane. And this was one of them. And so let's dive into why it happened. As you know, the CPI report came out today, much weaker than expected. Expectations were for a 0.6% rise, and it came in at 0.4. The core CPI expectations were 0.5%, came in at 0.3%. Now, these numbers were a lot weaker than people expected, and it got the market really excited. And so what happened was we got this big pop off of the news, about 3% on the S&P. And then what we saw throughout the rest of the day is we saw two things. We saw the US dollar get absolutely destroyed. Now let's talk about why this is so important. The US dollar, when it's strong, it means that other countries that do a lot of business with the US are at a disadvantage because their currency is so much weaker. Specifically, emerging market economies have a real difficult time when the dollar is so strong. Also, any US company that does a lot of exporting, it actually hurts their profits. So the dollar came down and it just fueled the rally. And then we got bond yields collapsing. So bond yields tumbled, again, fueling more of the rally because any of the stocks that had been going down because of worries of higher interest rates, they got a reprieve. And so the market absolutely soared. And you can see the advanced decline line, almost 9-to-1 up day. And take a look at the 50-day moving average. There are more stocks above the 50-day moving average than below it now. That is a sign of a bullish market. Now look, I'm not calling this a bull market. This is in no way, shape, or form a bull market. But what it is right now, it's a bullish market. We have a lot of bullishness out there. So let's take a look at the charts. And you can see here we have broken out of resistance. We had talked about 390 being the resistance level. And you can see we have closed above that pretty substantially. The next level we're looking at here on the S&P is all the way up to 4,100. Now look, I'm not saying it's going to get there soon, but that is the next level. When you take a look at this chart, you have to be bullish. Now look, I know you don't feel bullish. I know some of you don't feel like the economy is doing that great, and you don't feel like you liked what happened in the elections. That's great. And it's also too bad. That's how you feel. The charts are telling you what to do in your trading. You can still feel like this economy's not that good and feel like we're going into recession and feel like inflation's out of control. You can still feel that, but don't trade your feelings. Trade the facts, and the chart is telling you to go long. Now, this is S&P stocks. Let's take a look over here at the NASDAQ. Now, the NASDAQ isn't as good. And you can see we actually have not yet really cleared out of our resistance up here at about 284 on the Qs. There is a lot more resistance. We see another level right up above. So we're going to go back to where we were for the last 3 weeks. The Dow looks bullish, the S&P looks pretty bullish, and the NASDAQ is still in trouble. That being said, if the rest of the market keeps going higher, it's going to pull the NASDAQ up with it, but expect the NASDAQ to underperform. Now, I know I say that on a day that the NASDAQ outperformed everything, up 7.38%, but what we mean by that, look, in these kind of bottoming rallies, the worst stocks get the biggest bounces. If you want to take a look at a crazy stock chart, take a look at Carvana. This stock has lost like 450 points. It's insane. And it got all the way down to 7. And today it went up 30%. Okay, when you take a look at what they went up today, yeah, all of these beaten down stocks had great jumps. 30%, 20%. It doesn't mean they're buys here. So we want to be strict with what we're looking to buy. We want to buy the things that were already doing well before this news. That's where we're going to be searching and hunting. And when we take a look at the heat map, there's really not much to say. It's a sea of green. Pretty much everything went up today. So look, it was just a big market rally, the biggest we've had in 2.5 years. Okay, that's where we are. So when we go to our outlook and we say, okay, we were at a 0 and a 0 at the first of the week. We had said, hey, we're no longer bearish to these markets, but we're not really bullish. It's not really showing us to be bullish yet. So we said, look, we're at a 0, 0. We're going to wait for the CPI report. and then we'll make adjustments after the CPI report. Well, here we are. It's after the CPI report. And when we make our adjustments, we have to make adjustments to, we're a +2 market here on the SPY. We are a 0 on the Qs, but the Dow and SPY, look, they're bullish. I know you may not feel like it. Look, we might have a pullback a little bit tomorrow. I don't think we do, but we could have a little pullback. We just raced 5 or 6% higher, and we're now almost 10% off the bottom. We could have a pullback at any time. But the line in the sand, at least for me, is the 50-day moving average. Once the market is above a 50-day moving average, I'm more bullish than bearish. And we are clearly at that point. So for me, I've got to be at my +2s. That's where I am on S&P stocks. Tech, I'm still at a 0. Let's take a look at a few trades. I did not even look for any neutral trades here. We are at the influx of a potential market bottom. And we've seen that at these potential market bottoms, we get these big moves. Not really a great environment for sideways trades. So I'm just going to focus on some bulls and some bears. Now let's talk about what I just said. We want to be long stocks that were already doing well before the CPI report, because they're going to be a little bit more stable. They're going to be a little bit more strong. We are going to avoid the things that were terrible and had a big jump out the bottom. We're not going to go bottom fishing. We are going to either be looking to avoid those on the long side, or we're going to be looking to short those once they run out of some steam. On the long side, here we have TJ Maxx. This is what we're talking about. This stock decided to be strong back in October when the rest of the market was falling. The rest of the market was tanking. And TJX is like, hold my beer. I'm going higher. We got a nice breakout of a 2-week high base here. This thing looks fantastic. I'm looking real short terms, target of 75. I want to do a diagonal call spread, a 70-75 with next Friday's expiration. And if it runs up and goes past, I'll make a decent profit. If it hangs out on this area, I will either break even, make a little bit, lose a little bit. This thing looks like it's not going to be coming down into this base soon. So that's why I like the diagonal call spread on this. This here is Royal Cruise Lines. You think, wait, who is going on cruises now? I don't care. I don't care what you think about the cruise lines. Look at this thing. This thing is racing higher. This stock is benefiting quite a bit from the lower interest rates. They've got a lot of interest payments in debt, and lower interest rates are definitely going to help us. But you could see it stopped going down October 1st. Show me a tech stock that stopped going down October 1st. Look, I'm sure there's one or two, but not many. This thing has been going straight up for over a month. We consolidated for a couple of weeks, and we're breaking out higher. So RCL, I think you can look all the way up to 60 on this one for your target. Now that's the longs. There's lots of longs out there. Things in the S&P 500 and general market, they actually have been looking good for a couple of weeks, and we pointed that out. Let's go over to what you want to be looking for to avoid going long and to actively be looking to take a short position at some point. So all I did is I went to FinViz and I said, give me the worst stocks for the year. And then I looked for the ones that had the best performance over the last week. So here we have Meta. Meta's up like 25% for the week. Now look, I know it got crushed lately. I get that. And we had a nice green candle today. And this candle is not telling you to go short tomorrow. Absolutely not. And frankly, we've got a gap all the way up here to the 121 area. I'm going to let this thing just float up. I'm going to let this thing float up when it finally gives me a good red candle with a confirmation. I'll go ahead and take it short. I will absolutely like to hit this one. It's just not ready right now. So this is what I'm looking for. The stocks that have been the worst performers, that have had the biggest bounces, and when the market finally runs out of this upside momentum, these are the things you want to short. And another one, this is APP, Digital Turbine. Big break off this one. Again, as of yesterday, it was trading at all-time lows here. Well, not all-time lows, but yearly lows. And you can see stock goes up 20% in a day. We still have room to go higher. We could get all the way up to this 17, maybe even up to this 18 area. It would not surprise me at all if we got up to this area. That's fine. That's just where I want to look to short it. What I want to see is I want to see it run up. Then I want to see like a shooting star and then a confirmation candle to the downside. That's going to be my trigger on this. So look, there's nothing ready to go short right here, right now, because everything has such a big update today. I'm just looking for the worst performing stocks to lose this momentum, and then I'm very happy to get back on the short side on these. So really, that is the plan here. There's lots of longs that can be bought right away. The shorts are going to develop here in the next couple of weeks. So let me say this again. The markets are technically bullish now. I know you may not feel this way. I know you might say, Rob, this is going to all unwind. Okay, that's great. But look, we don't trade those opinions. Those are your opinions. I have my opinions. We trade the charts. And when the market is above the 50-day moving average, that is telling us to be more net long than short. That's it. And if it goes down below, then we'll have to say, okay, that was wrong, and we'll make some adjustments to that. But this has been a very, very good system for the last 20 years at Maverick. And that's why we share it with everyone so much. Tomorrow, we don't really have much on economic reports or on earnings. And so it's really just going to be a carryover of what happened today. I had a couple of messages before the market closed saying, hey, Rob, what do you think about tomorrow's action? Look, anytime a market goes up 5.5% in a day, I'm always going to say, hey, it's tired. It made a big run. The most typical candle you're going to see is a harami after a big expanded range candle. So you get a big candle, and then what you typically see is you see a candle that trades somewhere up in this area. So the most likely candle is going to be a harami. You could even go all the way down to half of this candle, even though I doubt we see that tomorrow. I think we're going to get a candle that looks like this. So that's slightly up, slightly down, whatever it is. But I think that's where we are. We spent a lot of energy today, and the market probably takes a rest tomorrow. I think that's where we are. And then on Monday is going to be the confirmation to this harami. If Monday's an up day, hey, that's a really good buy right there. And if Monday is a down day, yeah, I'm going to have to back off my bullishness a little bit. But as long as this 50% line holds, that's going to be fine. And the 50-day moving average. But of course, we'll see. Thank you so much for joining me. Big update today. If you were bullish, great job. If you're bearish, I know we had a few traders that were caught bearish, and it stung a little bit. But look, this is why we have risk management. This is why we have capital allocation. Shake it off and just make your changes and trade the market in front of you. Bye, everybody.